Hi everyone, Ben here. Welcome back to the channel where I find you investment ideas that grow and protect your wealth. In this video, I'm going to give an overview of Pembina Pipeline, talk about the company's past performance, and discuss the future plans of the company. Pembina is an integrated network of assets, including hydrocarbon liquids and natural gas pipelines, gas gathering and processing facilities, and export terminal business. Most of Pembina's operations are located in Western Canada, which is an attractive growing area for production of oil and gas. This oil and gas production will need to be moved, stored, and processed. This will benefit companies like Pembina, and I'll get more into that growth in the area in just a minute. Pembina trades on the Toronto Stock Exchange under the ticker symbol PPL. It is a big company with a market cap of 33 billion. Pembina is pretty fairly valued, trading at a PE of 19. The company pays a nice dividend of 4.83%, which is really what most investors are looking for in this stock is Pembina's nice, safe, reliable dividend. The debt to equity is somewhat high at 76%, but for a capital intensive sector like pipeline companies, they do carry a lot of debt. So this is mostly in line with a lot of the other pipeline companies. Pembina is currently working on these three projects. The RFS 4 is increasing the fractionation capacity of Redwater Complex up 55 million barrels per day. Fractionation is the process of separating out the different hydrocarbons and water. They also have been recently sanctioned to increase natural gas production capacity at their Wapiti plant by 150 million cubic feet per day. Also, Pembina is increasing power production at K3 to fully supply power requirements to the company, and any excess will be sold back to the grid. A bit about the history of the dividend. They have a good track record of maintaining and growing the dividend. The standard payout ratio is 48%, so a very sustainable payout ratio. Also, over the last 10 years, EBITDA per share has grown about at an 11% CAGR. Adjusted cash flow from operations has grown 9%, and the dividend has grown at about a 5% CAGR. So, not stellar high growth, but very consistent, reliable growth. Pembina is a very active company. A lot of investors think that pipeline companies are just kind of sitting on their current assets, but Pembina is very active in building out new projects in an effort to increase cash flow. You can see the company has been very active. It has a great construction track record in the past. The company is great at constructing these projects on time or ahead of schedule. So 17 out of 17 projects were either finished ahead of schedule or on schedule. 11 were under budget, 3 were on budget, and just 3 were over budget. So great industry leading performance. Adjusted EBITDA has been growing since 2022, but guidance is calling for a flat adjusted EBITDA for 2025 compared to 2024. The company is also giving guidance of fee-based adjusted EBITDA per share of between $6.55 and $6.90, growing at a CAGR of 4 to 6% since 2023. Growth is not that big, but looking very steady. You can see here a lot of infrastructure projects planned in Western Canada that will benefit Pembina as well. Most notable are the liquefied natural gas and propane exports that will help drive production, which will require transportation of the gas from pipeline companies like Pembina. So lots of growth in the future, about $4 billion in projects currently underway and over $4 billion of projects under development. The key takeaways for the company are it pays a very reliable dividend of 4.8%. It is fairly valued, trading at a PE of 19. Pembina has strong growth for a pipeline company. Pembina is operating in an area in Western Canada that is poised for future growth in the oil and gas sector that will benefit the company. The stock is in a recession resistant sector if you are worried about a slowdown in the economy. The stock will continue to have a tailwind if the Bank of Canada continues to cut rates. causing yield-hungry investors to continue to rotate into stable dividend stocks like Pembina. That's all for now. This is not financial advice. Please do your own due diligence. Thanks for watching, and we'll see you in the next one.